Can you see the EMD chart?
Yes, we can.
All right, so what I'm going to show here today is a quick trade recap. This is actually something we call the Futures Oracle. It's part of the Pro package. Most of you know that, but we have some new folks in here today. And, it's based on, I don't know, something like 100 calculations looking at various components of the market. It's actually, this particular one is looking at a strong correlation right now between the movement of the euro and the equity markets. So sometimes we put this Oracle indicator on some of the equity charts. You can put it on the Russell, you can put it on NASDAQ, if you like those, YM, usually good correlation there. Today we're looking at EMD. I want to just show here, this is right, excuse me, this is right around when Gary was opening up the room here, 5:55. This is California Pacific time down here. All the equity markets went into this just slam it, precipitous sell-off. Now this all happened pretty quickly, so I mean you pretty much had to be in this market to catch this move. But I didn't really want to focus too much on that trade setup right there. The oracles, of course, were weak, and then basically the longer-term oracle down here has been just negative all day, more or less kind of reinforcing the fact that to be looking for shorties. Up here, for instance, let me come over and let's get closer to the open of the U.S. market, which was right over in here. 6:30 Pacific would have been, oops, right about over in here. Yeah, 6:30 was Pacific, was right about somewhere right about in there. Oops. Now, what we like to do, and this is where Rich and Gary were more or less looking for short trades. I don't have the 12 range guidance dots on here. I think the line in the sand trades where it's coming up. And what we like to do is, when the market comes out after a huge drop, you're going to get some consolidation. You see you got some support kind of in here, and then you get some support, starting to form kind of up in here, and then, it was essentially a pennant formation, which, a flag, which is either a reversal or a continuation. In this case, it turned out to be a continuation to the downside. You can see that the oracles were more or less portending that this break was going to happen right here. And it did. Hit it all the way back down, taking out these swing levels here, taking that swing out, taking that swing out, and then you get a nice yellow bar probe right at the tail end of the move. Right here. See the little hook? See how it comes up, hooks over, and then rolls over and tells you that to look to re-short it. This is all telling you to look for short trades pretty much all morning. See the negative values on the oracles? Now you did get a break up here. The market did here. Let's kind of move over to the end of the story real quick here. You did get a bounce. This short trade here off the yellow bar probe would have stopped out somewhere in this area right over here. See where it comes through the stop dots? And then you get this really deep retracement coming up into here. Now, some traders might say, if you're a little more experienced and you have a pretty good understanding of indicators and swings and what have you, you could have taken a little counter trend long trade in here. I'm saying counter trend because clearly the overall direction of the market is down. However, you did get a little break up here, and you could have popped in here and caught a little. I want to get into the details of how you could have done it, but see how you have a thrust, a retracement, and then a thrust up? And that trade actually stopped out, and the shorties came back right in here and reasserted themselves. This was actually a beautiful trade here. If you shorted anywhere just around the 79 area when it took this swing out here, you would have just cut. In fact, I think Gary was just calling this out a few minutes ago. He says you would have been covering your trade right in here. Russell, NASDAQ, EMD, everything bounced. See how it took your stop dots out right here? Essentially, that trade was from here to somewhere right about in there, 73, plus or minus a couple of ticks. This drop alone from here, 79-ish to 73, it's a 60 tick short right there. EMD's $10 a tick. That was a $600 trade, that trade right there. If you didn't take any of these other trades, nothing, didn't do anything all morning, you just took that one trade. That's why you hear like Rich said, he was, I don't think it was 2 or 3 and done. That's what he's referring to. He's in here, he's shorting these things. We're taking shorts, short, maybe you scalp a little bounce on here, re-short it. And if you're happy with your accomplishments, you've made good money, you will pretty much want to lock it down and stop trading, because you can see what's happening right now. You could argue that we had another sort of yellow bar probe set up here. It started to roll over, but after all this movement, after we see 200 tick moves in the equities, what can we expect to happen? What do we think is going to happen after 200 tick moves in the equities? That's right, chop and consolidation. Chop, sideways chop and consolidation. So if you've made good money taking those trades from earlier, you pretty much want to kind of look to lock it down now. There were some high energy times in here too. Gary, I don't recall exactly when the high energy times were. I think there was one at somewhere around 7:30, 7:25.
Yeah, 7:26, I believe.
Yes, okay, 7:26, which marked, it was within like a minute or two of this little swing low. If you're new in here and you're just sort of experiencing the high energy times and the room and the terminology and all that sort of stuff, don't feel like you need to be intimidated by it. Give yourself a little bit of time. The high energy times usually mark some kind of swing high or swing low or increased volatility. We treat it almost like a news event. Treat it almost a little bit like a news event. So you're looking for something to happen. In this case, at this particular time in the morning, that turned out to be the swing low in the equities, right about in there. So the key is obviously to have a little bit of patience and trade what you see. I personally, during the U.S. equity in the first couple hours when we're in the room, I like to track and trade 2 markets, NASDAQ and EMD. But you can trade other things. We have YM, you got the Russell. Gary likes the Russell. Russell has a little deeper retraces and moves a little quicker, but has all the equity charts kind of look more or less kind of like this today. Very similar. Rolled over, broke down, shorty, large retracement, back down, short, 50, 60 tick drops, and now consolidation. That's what we get after these big moves. Chop. All right, well, if you have the Pro package, you might want to take a look at putting these oracles on some of your equity charts. We showed this the past few days. And you know, some days correlate a little better than others. But for the most part, when you see, you know, this much negativity, you're pretty much looking to sell the market when the setups come along. Any questions? Questions on what we recapped here today? Questions on what we recapped? I don't see any.